Apple, new electric vehicle, just like they released back 5-6 years ago. We got a new electric vehicle coming out, new car, the Apple car. What's up, everybody? Chris over here. I am the head trader at Pollinate Trading and the founder. Go ahead and like and subscribe to this video because I'm going to start putting a lot more of these out that are more timely, giving us an idea of what's going on. Now, we're not done on Apple after yesterday's big day, and I'm going to show you what potentially we have. But this is a trade we got into in the trading lab back in, and just personally, back here at 144, right before earnings. So how many people just have a tough time dealing with earnings? How many people have a tough time trading knowing that earnings are coming out and you would rather buy it after? All good strategies, all good things. We don't take earnings into account in this strategy, unlike the equity earnings strategy, which specifically focuses on it. We have all our strategies at pollinatetrading.com. You can go find those there. All right, let's get into it. Yesterday, Bloomberg reported that Apple is accelerating work on car project aiming for fully autonomous vehicle. That part's pretty important, the fully autonomous vehicle. Now, I'm not a big news guy, but obviously a bunch of people yesterday were. So I'd like to be set up for a big event like that, a big news event, to take advantage of our strategy. Well, if you think about what company out there, if you're an Apple fan, would you love if they had a car? Apple's probably at the top of the list. If you think about what tech company out there that you trust with your data and security, Apple's probably at the top of the list. A Facebook car, a Google car, probably not something you would be too excited to get into and have their AI kill you. Apple, on the other hand, the thing you think of is sleek, clean. It works really well within its entire ecosystem. All those things make Apple Car very interesting. And I'm going to go into a couple of things, but they really don't have anything to do with this trade. I'm just going to get into the ideas here that, they've got a massive amount of cash. And in order to keep innovating and keep, put that cash to use, they need a big market. And there's not many other big addressable markets than things like automobiles, electronic vehicles, and AI. Who else in the game do you trust with AI? I would say probably Apple is right at the top of that list with things like Siri and all the other AI that they have. They've also proven with this new M1 chip that they have and I have it on my phone. I have it on my I assume it's on my phone. I definitely know it's on my Mac Mini, and it's light years compared to my MacBook Pro, which is I think it's an Intel chip. It's just light years different, and you don't really think about it until I render a video on my MacBook. It'll take 20 minutes. On my Mini, it's like 2 minutes for a full gig or 2 gig video. It's incredible. And those are sort of things that as a user you realize, like, that moves the needle. If they come out and say, oh yeah, we did this, we did that, whatever, you're just kind of like, okay, whatever. But when you can tell that the chip is really doing it, well, that opens up the idea that, well, maybe they could actually make that car with an autonomous vehicle. Maybe Apple is the company that could do that. So all that being said, I'm long. We had a good catalyst yesterday. I don't think it's the end of it. I think we still got a lot more to go. And the strategy that I'm going to highlight here is something that really takes advantage of getting in at the beginning of a catalyst, not at the end where they're selling you their people like me are selling you your shares because we got in over here. This strategy, specifically, I'm going to use Apple because we're right in the middle of it, and it's a real example. And I'm going to show a few other ones that we're already in that have the same tendencies. So all that news I talked about with Apple is only kind of relevant, not relevant at all to my trading. But it's slightly relevant, and it's very interesting. So what's interesting about that obviously is the car, right? But what's more interesting is a trade, getting in trades. That's what we do. We're traders. And catching a move that can last about a month and a half, 2 months is where you can catch some really strong momentum. If we look left here, you see this distance from June to even to September, right? June to July was 1 month. You go from 120, let's call it 123, whatever, 125 to about 150 in a month, right? So that's a pretty solid move in a short period of time. Now, if you bought the stock at 125, the actual shares of the stock, you bought 100 shares at 125 and you sell at 150, you make a couple. It looks like $12,000 to $15,000, $2,000-$3,000, right? What we're doing is we're getting in on the options over here, and it's a very unique approach to options. They have, when applied to a massive momentum run, when you get in on the sign that it's going, and you don't have to get in on the first day of the move, which is nice about the strategy. You can catch the move as it's going. And sure, so for example, we got long over here, takes off right away, which I love to see. And then you get earnings and it peters right out. But the following day, that earnings was bought. So we know everybody's going to be buying Apple on bad news, right? Even though you could have got it over here or whatever. They love it here. And so who doesn't love to say, I bought the dip, right? Who doesn't love, of people who doesn't love that? So I sit in this trade and, I'm doing okay. I'm up about, 25%, 50%, no, up about 50%. And it's just sitting here. So $1,000 option trade, I'm up $500. Okay, mildly entertaining. Then the last 2 days, Wednesday and Thursday go, and those things are up 200%. That's crazy. 200%, $1,000. So you're looking at you make the exact same amount of money, but instead of putting up $10,000, $12,000, you're putting up $1,000 to catch it. And we still got room. So that's what I'm going to talk about here. Now, it's not just tech that's going to be the thing that is really exciting, because it works everywhere. Momentum stocks come all over the place, not just from the big fangum or whatever they're called now, mangums or whatever, not just the high momentum stock, not the top 5 of the S&P. It works there greatly, but it also works in things like Pfizer. So we got into Pfizer earlier this week, and like instantly they reported that they were going to, I don't know, something with the FDA. They got a pill coming out that's COVID proof or something, right? Don't care. We got in earlier than the announcement, and since the announcement, it's broken out to new all-time highs. So if you're buying the stock, it's $49.50. You buy $5,000, and it's up to $52. So you've made $300, right? $250, $300. Not all that exciting. You put $1,000 on this trade, and you already doubled your money in that same period of time, because we're using options to get access to these trades early before the real move happens. So initial move happens, and that's how we get involved, and then the follow through is where the magic is at. So this one, again, these last about a month to 2 months. And there's very specific details we have on these. I know the exact win rate. We know our exact average winner, our outlier winners, and we know what our loss is always going to be. So it's a very simple way to apply a low amount of capital and get massive leverage when the market's in the right environment, when we're in the right appropriate market regime. And as you know, if you follow me at all, you understand I love market regimes. The correct market regime is where you get in and you catch these massive runners. And then when they're not in these, instead of buying up here, you're buying down here, or you're buying here. Instead of, buying the top, this sporadic top that just, goes from about 51 down to 41. So 10, a 10-point loser. And then before you even get back to break even. we're just starting on this one. So knowing when to be in the appropriate, when the market is, the asset you're trading is in the appropriate market regime is one of the secrets. And it's an unlock code that is just almost like cheating. Okay, except it's public data that everybody else has. Now we have, it doesn't just work only on, again, tech stocks. This is the agricultural ETF. This is DBA. It's ags. I mean, it's farming. And it's not even crypto farming, though maybe that's why we're starting to take off, because people are like, oh, I got to be farming. We got long over here, 1952 or so. And these have doubled. So the price going from 1950 to 20 or so, the options have doubled in price in about 2 weeks. So you buy 100 shares at $2,000, so about $2,000 here, and you're up $50 maybe. Whereas we got the right options. You put $1,000 to work, that's worth $2,000. You put $10,000 to work, that's worth $20,000. So it works across all assets. This is the least efficient asset to trade, but it still works there. ETFs of commodities and currencies are like the least good ones out there. The leverage on them is low. You can go and buy coffee futures a lot better. You throw a coffee chart up and you're going to see this exact same pattern. So why wouldn't you just, buy the coffee itself? But being the option trader, taking the options on these, we can get a low amount of capital, and we have limited risk. So the price of the option is the risk. At a 50% win rate, when your average winner is 4 to 8 times your average loser, that's a massive, massive windfall to the account. Okay, now this is all over, this pervasive across the market, but let's get into and I'm going to tell you, this Tesla trade was a great trade, long from 774. And believe it or not, the time, if you just use the time exit, which is how I use it, I just exit on time. I don't exit at any news event of somebody saying they're going to sell 10 billion shares or something like that. I don't sell because I'm scared it's gone too far too fast. The only thing that may override would be a little bit of price action at the top. So this would have been, to me, this would have been more of a bullish scenario, because that doesn't look too toppy. But look, this is a mania stock, but having a time filter on the exit, so you get in 774, this thing's already moved. Look, you're buying, this thing moved from the May 2021 low of 530. So it's already up 50% by the time I'm buying. Because I'm not looking for these slow, low alpha generating returns. I'm looking for the big momentum blow-offs. I want huge outcomes, right? And I want it to happen fairly quickly. So if your risk, let's say your risk was $30, by the time, if you're measuring this in R, so by the time it got out, this was a 13.5 R trade. So $1,000, well, certainly was much higher than 13,000 on the returns because of the options. It was more of I think it was a $35,000, something like that, on the actual options. It was a massive one. But again, it doesn't just work on the big movers. Right? You take the trade here at 14 and you're out, you're close to getting out at 20. That's a 50% move in the stock price, but in your options, that's a 10x on your option. That's not a double, that's a 10x. And it works here, it works here, it works here. We got long in the lab last year over here. I think it was in August. We got long over here back when I was first putting this strategy together. We got long, and we've actually been in this thing the entire time, because as I was first putting it together, I was thinking, okay, I want a stock strategy that I don't have to do much work, and then it'll get me out when I need to get out. So I actually bought Ford stock itself. Nowadays, we're talking a year and a half later, after as you know, I do massive amounts of back testing, and I start finding these anomalies. I start finding these great opportunities. Now you're getting in at 7 and you're exiting at 9. You're getting in at 9 and you're exiting at 13. This one probably just was a small double on the options, maybe, because it blew off, but the time filter died on it. So it doesn't work massively on every single trade, that's for sure. Long here, long here, long here, all working beautifully. And so what you see is you start seeing, and I want to point this little pattern out. This is where, if I was to throw Apple over this chart, where I got in would have been right here. Earnings, whatever, and then we're now at that first little area, or maybe right here, that first little area where it just announced the news of the autonomous vehicle and broke out 16 to 20, almost 21 since then. So the pattern, not the news, the pattern is what's important to see. Back to Apple real quick. So you see getting in over here, now it just barely put in new all-time high, right? Just barely. When we take a look at Ford, just barely getting above there and then ripping. Now it's not all-time high on Ford, I think. I believe, decades past they were far more profitable, but they're putting in effort. Now, where this one was the absolute beast was on NVDA, buying at all-time highs, right around this 234 area, on 1,000 shares. That thing's up. I want to say on the not 1,000 shares on the $1,000 worth of call options. I think that thing's I want to say it was above. Was it like 50,000? That might have been a $5,000 position. I forget. Anyway, it was a beast of a move, and it happened. Like, see how happened right there, happens right here. You can see these move happen, and there's also times when they don't happen. And what everybody's going after is they're buying these times that don't happen, and then they get discouraged and they never want to touch it again. And before they know it, they come back. They bought it at 151, goes down to 120 or whatever. They sell it 130. They never want to look at it again. And they come back and they see, oh crap, it's at 200. Oh crap, that's at 250. Oh crap, that's at 300. Okay, I need to own NVIDIA up here. And instead, you want to be, instead of buying here, suffering through the pain, and not getting any capital, you want to get in when the momentum's happening, and you want to use leverage in a way that's going to catch the moves the right way. Microsoft, same, like long 307, that thing's trading at 342. Look at that though. At the end of this move, how many times have you bought these big moves only to watch them just fizzle right in front of you? There's a strategy, there's a technique, there's a position sizing way to go about it. And Apple is definitely in the middle of that right now. Taking a pre-market. I'm recording this on Friday, November 19th. Got a bit of a pre-market down move. So about 0.5% down. It was up 2.5%, almost 3% yesterday. The day before, about over 2%. And that's just powered straight up. And it looks like it's just the beginning here. So this would actually be a signal to get long in this area over here too. All right, that's what I got today. I'm going to start putting a lot more of these out. I want to get everybody into the community. I want people to see this sort of stuff. You can join us in the trading lab, paulinatetrading.com/lab, and you can trade these with us. I spend hours every day live streaming, going over strategies and techniques. We're day trading the futures. We're trading crypto. We're trading options. Where the magic's happening, we're playing. So get over there, paulinatetrading.com. Follow me on Twitter @ChrisDMacro. That's all I got for this morning.